Hi, everyone. Dale Pinkert here at TradeGate Hub, and we are sponsored by TradeView Markets. And I get the opportunity to catch up with my trading warrior brother, Mark Yusko. Mark, it's been, God, a year or so since you and I have talked, maybe a couple.
Crazy. Time does fly. Time
You
does
know,
fly.
and so much has happened. Mark is the founder of Morgan Creek Capital, also has a division, Morgan Creek Digital, which will tell you what direction this talk is going to go into. So you're still involved in the traditional markets, Mark, where
Yeah.
you have a commentary for this strength and almost achieving, we're not that far. We're a stone's throw away from new all-time highs in the S&Ps. Did it surprise you?
Absolutely. I mean, but look, it's liquidity drives markets.
Yeah.
It's that simple. And I think you guys were talking about it earlier on the show that, if you look at the core economic data, things like industrial production, things like retail sales, and the actual retail sales, not this nonsense where they don't adjust for population growth and things or inflation.
Right.
The economy was looking pretty weak. I will argue we had a shallow recession last year in 2022, which is why the market declined so much. And the fact that, we changed the definition, so two subsequent quarters of negative GDP are not a recession anymore. Well,
yeah,
okay, you can say that, but it kind of wasn't. And the reason I say that is if you look at 2001, right, the last time we had a big tech bubble, the last time the Fed introduced massive liquidity back then, a couple $1 trillion, not as much as this time. But the key was that in 01, first quarter was negative, second quarter was positive, third quarter was negative. The whole year GDP was 1%, but that's still a recession, right? And it got called later and then it was exacerbated by 9/11. But this time, first quarter was negative, second quarter was negative, and then we had this quote unquote big bounce in third and fourth quarter. I'm like, no, it wasn't a big bounce. That was just releasing oil from the SPR to try to get oil prices down ahead of the election.
And the comps were really easy to make compared to last year's prices. So that's why we've seen it drop. Oil's been starting to come up, and I think a big component that the Fed can't control are food prices. And if you look at wheat with what Russia's doing and a lot of the weather markets because of Grande El Nino, grain prices look poised to head much higher, and the Fed can't print corn.
No, they can't. But at the end of the day, you can say, well, the labor component never got to the point of declaring a recession. So 5 out of the 6 indicators that the NBER uses for recession said we were in recession, but employment didn't. Well, why? Well, it's because employment still uses this silly birth-death ratio, and the birth-death ratio is an antiquated system. Why are we still using something where we have to estimate how many companies form, how many companies die, estimate the number? We know exactly how many people pay their payroll taxes every week. It's just silly, but it doesn't really matter at the end of the day, because ultimately what happened was we were looking pretty bad. The market was down a lot. Some stocks down 80, 90%. Yeah. That's what happens during recessions. So you can call it whatever you want. But then why is this big rally happening this year, and particularly in the big tech stocks? Well, again, you guys were talking about it earlier today. It's simply the Fed and central banks injecting liquidity back into the system to bail out ostensibly the banks, but ultimately the banks and extending credit to big tech. And so now what you've got is this self-perpetuating mechanism.
And it's bifurcated because the regional banks and really even the big money center banks they're contracting credit right now. They're not making a lot of loans. So do you think that this banking problem we had with SVB and flight from just the average account holder wanting to leave, that it's over? Because
no. I think it's just getting started. And look,
okay.
I think it's all part of the plan, which is where we're going to go. It's why I'm wearing the orange shirt. It's why we have Morgan Creek Digital. Look, I believe all of this, right? Sowing the seeds of doubt in the banking and financial system. You had the Secretary of the Treasury telling people that she had lost confidence in the banking system. Why would you say that? Unless you were going to come up with some solution to
CBDC
offer to people, CBDCs, which look,
okay.
CBDCs, central bank digital currencies, are, I believe, the, not personification, but they are the creation of pure evil, right? The idea that money could be programmable and controlled by governments is one of the craziest things you could ever imagine. And I don't know if you've seen the Augustin Carstens thing, but this guy who's the head of the BIS, he's this gigantic guy. I mean, he's a biscuit away from 450, right? And I know that's unkind, but he is. And he looks like Kingpin from the Spider-Man movie. And he gets up there and he says, well, of course, we should control how you spend your money. Of course, we should be in charge of that. I'm like, no, wait a second. Think about this dystopian nightmare.
Even Orwell didn't talk about having a digital currency.
Oh, absolutely. And what's even Elon Musk is tweeting out, make Orwell fiction again. Look, the idea of a currency that's based on fiat is bad enough, right? And we've had that since the 1600s when the Rothschilds invented it. And, then it made its way through the Bank of England and then into the Fed. And what does fiat mean? It means by decree, out of thin air, right? At a whim. And so if you think about the US dollar, which is what most of us, traffic in, from 1776, the formation of our, great republic, to 1913, a dollar. Now, why is it called a dollar? Does anyone really know? I actually do, right? It's because there was the Rijksdollar in Holland, where the Rothschilds created the first central bank. And because the Rothschilds and the Morgans and all these wealthy European and American families were all tied together, they're like, you know what? Why don't we use that? We'll use the dollar. So we're called the dollar. And the dollar was worth $1. There was no inflation. There was no devaluation of currency. There was some fluctuation around the wars, Civil War and stuff. But bottom line, till 1913, it was $1. From 1913 to today, it's now about 2.5 cents. So it's down about 97.5%. Now, why is that? Like, why is it a good thing for us as consumers that when I was growing up, when you were growing up, a candy bar was a dime, 15 cents, a quarter, right? Okay, now it's $2.50. I went out for ice cream. My family's down here at the beach. I'm working remote. And I took them to ice cream last night. $6
per
for an ice cream cone.
Yeah.
And then, of course, they wanted a tip, too, for scooping it. And I'm like, whoa. How is that a good thing, right? That prices rise. How is it a good thing that every 30 years.
Look at what you're paying at the hotel or wherever you're staying compared to 20 years ago. I don't know how families are able to take a vacation, middle-class family, when you can't find a hotel for less than $300 a night.
No, I don't either, except
a Motel 6, $300.
Dale, here's the thing. I think it is amazing, right? We just took a vacation and it was packed. Everywhere we went, the hotels were packed. Yeah. The airport was packed. The trains were packed. Everywhere we went. So that's why there has been a little bit of surprise to me and others that we aren't feeling the effects of the recession last year, and things are looking good. Now, part of that is money illusion. Right, is people feel wealthier because real estate prices are up, and,
right?
And
their 401ks have recovered.
401k is up, and that's that's fine.
Credit card debt is off the charts.
Credit card debt is the key. There was a great ad. You may not have seen it. This is years ago. There was this ad. This guy in the backyard barbecue, and all his friends are around. He's got the 2 big cars, and the boat, and the big house, and
all the symbols.
One guy says, "How do you afford all this stuff?" And he says, "I'm up to my eyeballs in debt." That's how. Yeah. And look, debt is not evil in and of itself. What's the evil part is when it becomes a path to indentured servitude, right? Where you are serving the master, so to speak. I know it's a politically charged comment, but you are a slave to that debt because, you think home ownership. We all, we were told that was the American dream, home ownership. Well, most people don't own their home. They basically just rent the money. So, they're not renting the home, they're renting the money. And that mortgage just keeps growing and ballooning. Now, people say, but if the value goes up, then your equity goes up. It's true if you transact, but they have to transact. And I don't know, there's an interesting dynamic today where a lot of people, right, refinance their mortgages at super low rates.
Yeah, they're not going anywhere,
and they can't move, right? Yeah. Right. So now you get a job opportunity someplace else. You want to sell your house and you want to move, and you go, whoa, I can't afford the new mortgage. Right. And look, the zero interest rate environment was the anomaly. This is not the anomaly. 5% interest rates, totally normal. That's the way it should be. That's how capitalism works. When we had negative rates, that was ridiculous, right? Pay a bank to hold your money.
Yeah,
silly.
Europe.
Yeah. But look, I think all of this comes down to the fact that there's a systematic and systemic plan to push people into this world of central bank digital currency and to control the last thing that they don't have control over. And that's a future I want no part of, actually.
Well, do you think it's going to happen?
I do. Yeah, I do. I think, look, it's
so how do you avoid that future then?
Well, it's a good question. So, part of it is, you could relocate. Now, imagine you're in China. They have a digital renminbi.
Yeah.
And you have social credit scoring, and you have, vaccine passports and all the dystopian nightmare, 15-minute cities, and you can't leave the city and you can't go into your apartment unless you have a little green smiley face. So what do? Well, you'd have to leave. Okay. Now people are leaving those types of places, but where do you go? Well, right now, if there's only one bad place, and I'm not saying China is bad, I'm saying that system is bad. I actually think China is great, and I think the growth is great, and I think the opportunities there are great, but I don't like that system. And it's like when Europe tried to put in vaccine passports, I'm like, that's just ridiculous, right? It's just a silly idea. And Djokovic, right, wasn't allowed to play in tournaments because of a choice he made on his own health. It's just silly. But if the US were to say, you know what, we're going to have a central bank digital currency, and we're going to control how your money is valued, like, I would have to think seriously about, where do I want to be? Now, I was over in Spain and Portugal for our vacation. We had been planning this for a long time. We finally did it. And Portugal has this interesting thing, no capital gains tax on digital assets. I kind of like that. It's a pretty nice place. Looks like San Francisco. They got the Bay Bridge. They got the cable cars. It's kind of a nice place. And they also have this thing called the Golden Passport. Now it's going away, but if you buy a piece of property there and you spend a couple weeks a year, you can actually get a passport. So I don't want to do that per se, but if certain countries go down the path of CBDC, you got to think about, where do you want to go? And I think there will be countries that realize, we want to attract people. I mean, El Salvador is trying this. Now, I'm not ready to go to El Salvador. Some people have. I'm not ready, but they're trying.
That's Max Kaiser.
Max and Stacy. And look, the president there said, look, we want people to come here. We want people to believe it's a better place. It's safer. I think they're doing a good job, but I I'm probably not ready to go there. Now, I did take a peek at Costa Rica. I think that's an interesting place. And so there are places around the world that are saying, we want people to come. I have a friend who's in the NFT space.
So you think Portugal is going to opt out because the ECB is going to have a digital currency too,
look,
right?
I think it's going to be an interesting dynamic, right? Because particularly in Europe, you have this loose confederation of states or countries, and not everybody believes in Brussels. So I think if they get really dystopian, I could see people splintering off. And look, we'll know when we know. And if enough people object, then even governments have a hard time implementing things. But
do you think there'll be enough pushback here in the US?
I certainly hope so, but experience says not really. People kind of like less friction in their life. And so they kind of go along to get along. But I think, look, if you push people too far, and I think CBDC would be that push too far, vaccine or not vaccine passport, but a digital passport where they can control where I go and checkpoints state to state, and that would be too much for me. So
I wouldn't like it either. So let's distract ourselves with making money.
Exactly.
In the market. So but I do want to get back to some geo stuff. So Larry Fink says that Bitcoin will transcend any international currency. Does that include, and what are your thoughts on the new BRIC currency backed by gold that's supposed to be launched late August, I believe? I'm hoping that's all China launches.
I don't fear China. I really don't. And I don't think China has global
they just want Taiwan. They just want Taiwan.
Well, but they already have Taiwan in their mind, right? Like I have this deal. I have this office in Chapel Hill, and I have these tables, and we were big BRIC investors for years. And so in my boardroom, I have a table that has the world map engraved in it. And then I have a Brazil, a Russia, an India, and a China. And these tables were made in China. And the funny thing is, the world map, there's no UK. Clearly intentional, because they don't like the UK very much. And the China map, Taiwan is clearly part of China. So in their mind, it is part of China. So I don't fear them doing anything militarily.
That's great news.
But and the reason is they think differently, right? From 1990 to 2020.
Well, what are they going to do, Mark? We keep poking the tiger in the eye with chips and nuts, and they, 66%.
No, we do.
Why are we doing this?
Well, because we're stupid. And look, we've been stupid, right? In 1931, Smoot and Hawley, two of the dumbest guys ever in Congress, and that's saying something to a dumb guy in Congress.
Right. Trade wars.
I mean,
it's an oxymoron.
Were the dumbest of the dumb, and they decided that tariffs after the Great, or at the beginning of the Great Depression was a good idea, and they turned a bad recession into a bad depression, and so tariffs have never worked. Right? Adam Smith was right 450 years ago that comparative advantage. Right? If you make wool and I make corn, we should each do what we do best and then trade. That's how it should. Globalization is good. More globalization. I had this great experience where we did this trip into Spain and Portugal, and I didn't really think about it because I'm an ugly American. In 1492, right? 1492, the center of the universe was Seville, Spain.
Yeah.
Why? Well, Queen Isabella, the first venture capitalist, said, "Hey, Chris, take these boats and go over and explore this new world." And the new world didn't exist, right? There was no North and South America. There was just this land mass. And here's the crazy thing that I didn't really think about, Dale. There were no horses here, no cows, no chickens, no pigs. Those are not endemic to North and South America. And there were no potatoes in Ireland. There were no tomatoes in Italy. We think Italy invented the tomato. No, they were from South America. So it wasn't until the trade, and the cool thing is Queen Isabella took 20% of the stuff that Christopher carried back, right? Carried interest, the idea of a percentage of profit. She was the first venture capitalist. And what we forget about is that was a time when we were building this new world, and that was the gateway to the new world. So here we are at this gateway to the next, version of the new world, the digital new world. And Larry Fink says, this is interesting. And now here's the crazy thing. 2 years ago, this guy was saying it's a fraud, it's a Ponzi. Yeah. Well, why? Well, if you think about, again, go back to Portugal.
He probably listened to a few of your interviews. You're a great ambassador for it.
I don't know, but it's hard to believe that Portugal in the 1400s had the so powerful, had the world reserve currency, was the most powerful nation in the world. Portugal, it's little tiny. It's about the size of Indiana. I mean, it's not very big. And yet it was the world superpower because they had the most powerful navy and they had the fastest ships, and they had this queen that was pretty smart, and they had the Knights Templar, which is a whole other story. But the key is that Spain then took them over, and Spain became the superpower. But it was a long time before America was the superpower. And so there's been this constant evolution of supply and demand. And part of that is the center of the universe was Portugal, then Spain, then France, then the Netherlands. Think about that. The Netherlands? How did the Netherlands take over? Well, because they invented fractional reserve banking under the Rothschilds. And then half the Rothschilds went to the UK, and the UK became the superpower. And then we took the technology in 1913 from the Bank of England and created a Fed, and we became a superpower. Now, here's the thing. China has been nipping at our heels. Well, from 1990 to 2020, China had a single plan. They have a 30-year plan. They think in 30, we can't even think in 4-year plans, let alone, 30 years. But they had a 30-year plan to become a moderately prosperous socialism society. Sounds kind of nice. It was called the Great Rising. Sounds really nice. They took 700 million people,
lifted them up,
700 million people out of abject poverty into the middle class. One of the greatest humanitarian things in the history of mankind. Unbelievable. Okay, that was from 1990 to 2020. Well, now the next 30-year plan is a little different. They want to become the superpower. The. So now they're
not A. Yeah.
Not A. They're not. They want to be the. Now, what does that mean? That doesn't mean like take over the world. It means they want to be. They want to have the global reserve currency. They want the renminbi. Now they have to get to full convertibility first and all this other stuff. But they want to have self-sufficiency. So what do? We slap a bunch of tariffs on them in 2016, 17. Yeah. And what happens? Trade with China actually goes up. We just set a new all-time record for goods imported from China. So it had nothing to do with anything. And we're like, oh, well, they're doing bad stuff. Huawei is a bad company. Like, look, 30 years ago, Huawei stole a bunch of stuff. Today, they're innovating. We're stealing stuff from them. They're doing the innovation. 96% of AI citations, AI kind of research, 96% from China. They lead in AI and 5G. Most sophisticated advanced systems. We're awesome in America at social media, right? Instagram, Facebook, we rock. They rock 5G. You go to Mexico. They don't use American 5G. They use Huawei 5G. I was in Costa Rica on spring break with my family, and the driver in the middle of the rainforest is streaming internet to my son in the back seat playing his video game. He's using a Huawei router. not a Verizon or an AT&T or, somebody else, Cisco. He's using a Huawei product.
They're winning.
They're winning. And it's because they think long-term. Now, what does that mean? All that means is they're going to continue to ascend. They're going to continue to have middle class, and they're going to become, this is the opportunity, they're going to become the greatest consumptive force in the history of mankind. Their middle class is the size of the US and Europe put together. Right. And that middle class is going from, I need an air conditioner, to I need a scooter, to I need an apartment, to I need a car, to I need to vacation, to I need, all the luxuries that we all take for granted. And that's going to happen. Well, that's actually a good thing for us, because we have companies that could sell to them if we stop this nonsense of Cold War 2.0.
But don't they have some problems with youth unemployment?
Sure.
Men not being able to find wives because of one child policy for a while. So we're better to put those unemployed young men than into a uniform.
Yeah, look, that is certainly how history has gone, right? When you have disenfranchised men, you choose to militarize and create, but there's no evidence of that happening, right? Okay. They're not investing.
The reopening was definitely a disappointment to the markets. Copper really hasn't been doing well. Aussie under pressure. I just want to ask you, I know you're bullish long term, but China was really responsible for pulling us up by the bootstraps in 2009, because they were still growing.
They saved the world, $4 trillion. They put $4 trillion from the PBOC into their economy, which then saved, oil hit $26, remember? And on February, whatever 10th it was. And from that point, they were buying all the oil futures. They saved the world.
So here we are now. Could it be the opposite, that they actually drag us into some type of recession?
It's a great point, but here's the thing. They started the liquidity wave last October. They started printing.
Yeah, they did.
$1 trillion.
Chinese stocks were flying. I remember.
And look, Chinese stocks were taking off, and now they've gone down again in first and second quarter. Why? Because we started the rhetoric again. And look, I get it. I get that the US likes being number one. But our leadership, what's the word that I'm searching for? It sucks. Okay. And it sucked for a long time. Both sides of the aisle. It's horrible.
You mean our justification, like our president's justification? I think it's one of the worst national security statements ever made by a president. Well, we gave the Ukrainians our cluster bombs is because we're running out of ammo. So that's all we had to give until we have more ammo. So, a message to the world is that, we're weak. We're out. It's like going to a gunfight and saying, you know what? I'm out of bullets, but I'm going to get some if you'll just wait before you draw on me.
Wait. Yeah. You wait to draw. But here's the thing. Look, yes, we have horrible leadership, terrible. And look, the proxy war in Ukraine, it's just a money-making exercise for the military-industrial complex. You even had Schumer say the other day, oh, don't worry, the money's not going to Ukraine. It's going to U.S. military companies. That's just money laundering. That is definitionally money laundering. You send money someplace to buy stuff that you're not approved to buy yourself. That's money laundering. So that aside, war, to your point, is what countries do when they have the threat of civil unrest. The difference here is China still grows at about 4 or 5 times as fast as the United States and Germany and Japan. And no, it's not as fast as it was. It's just the law of large numbers, but it's still fast enough. I think that's still true that they build 5 cities the size of Philadelphia every year, right? They'll lay more high-speed rail this year than, all of the United States. We don't even have any high-speed rail to speak of. And so, they're playing a different game. They're playing the long game, but ultimately, I think it it goes back again to comparative advantage. What are they really good at? They're really good at training STEM engineers. Oh. Here's a great stat. In the United States, we graduate 450,000 STEM engineers every year.
Seems like a lot. Yeah.
Seems like a lot. China graduates 4.5 million.
10 times, of course.
10 times. People say, oh, but they're all bad. I'm like, okay, let's say half of them are bad, which is not true, but let's say half of them come from schools that aren't really that good. Probably not true, but okay. Because the nice thing about STEM, it's not subjective. It's objective, right? There are formulas, there are rules, and it's not like, is it a good liberal arts college? That's subjective. How do you rank an anthropology major or a fine arts major? With STEM, can you pass the test? Can you do does your bridge fall down when you make it? And the reality is they are engineering their butts off and they are winning in this globalization. And what's happening is we're bifurcating into a bipolar world. There's the China, Russia kind of Silk Road alliance. And there's the Europe-US with Japan thrown in their alliance. And okay, that's fine, but we'd be better off with a single global alliance and try to avoid the polarization. And I use the joke that everyone says, Putin's a 3D chess master. Yeah, fine. We're checker players in America. Like we're arguing how to set up the checkerboard. China's not playing chess or checkers. They're playing Go. And the reason I use Go is checkers and chess are a confrontational game, right? It's mano a mano, center of the board. Go is a regional, different regions of the board comparative advantage game. And you quietly assemble your advantage in different places and then you win. And that's kind of what China's doing. And so, again, doesn't mean I want to move to China tomorrow. Although I used to say if I was 26 and unmarried, neither of which I am, I would move to Shanghai. And that's still true. It's an amazing city. And the opportunities there are amazing. But now I look at other parts of the world, parts of Latin America, parts of Eastern Europe, and I think, there's equal opportunity there.
Okay. So, I want to spend a little time talking about Bitcoin.
Yeah.
Besides ETF, we've had this nice little run to about 30,000. We've run into trouble. If we have a liquidity event, Mark, like say, for example, a crash in equities, do you think there'll be a reset that Bitcoin will benefit from that?
Benefit. 100%. And here's why I say that, because everyone wants to play this narrative that Bitcoin's a risk-on asset. It's not. It's actually uncorrelated to stocks,
everything,
and bonds. And
everything.
You say no. It was correlated in 2022.
Yeah.
Well, okay. Let's think about this. Why? 2022, like 2020, like 2001, like 2009. Were what? They were liquidity events, right? They were too much leverage. Yeah. And when leverage gets unwound, all correlations go to 1. So all assets go down. And the worst is things that, your listeners love, right? Gold, bonds, copper, they went down too. Think about everything. 2020. They went down a lot.
All one market. It's all one market.
Because what happens is you owned Apple stock on margin. Apple stock goes down. You get a margin call. What do you sell? Well, you're not going to sell the Apple because it went down. You're going to sell what you can sell. So you're going to sell your bonds. You're going to sell your gold. You're going to sell your silver. You're going to sell your Bitcoin. So all those things go down. And when they go down to prices where you're like scratching your head. I mean, Bitcoin hit $5,000 in 2020. And people say, it's going to zero. Like, no, it's not going to zero. It's $30,000 today.
That's right.
Well, last summer, right? FTX happens and there's a bunch of liquidations and too much leverage in the system, and Binance and the SEC is going after.
That was the crypto winter, and we've we've gone through a little spring, and you think we're entering summer.
I think we're in summer. And what does summer mean? Summer is a drift upwards where we move toward fair value. What's fair value? Well, if you look at the Metcalfs Law model, now what is Metcalfs Law? Metcalfs Law, in the olden days, again, where we were growing up, had FM radio.
Yeah.
And if you could hear the FM radio, like I lived in Seattle, I could hear WGN from Chicago in Seattle, Washington, because they had the biggest tower and it could broadcast. So every person that heard that, there was a guy, Sarnoff, that said, the value of the network is each listener to the network. Okay. That was called Sarnoff's Law. And Metcalf came along and said, no, because Mark and Dale might talk to each other. So there's benefits, not just to each individual member, but to the interconnection they have. So that's squared. It's not a linear relationship. It's an exponential relationship. So Metcalf's Law. Well, then Reed came along and said, well, yeah, but Mark and Dale might talk to each other, but then there could be other people on the other side of the network that have, and so there are going to be sub networks, and those connections are even stronger. And now I've actually come up with the fourth iteration, and I named it after this friend of mine, Sophia Vachetto, called Vachetto's Law, which is the pipe that connects the connections can vary. Like you and I might talk all the time, and two other people might not talk very often. So the width of the pipe between the connections matters. So all these network connections go into this thing called Metcalf's Law, and we can draw a parabolic curve. And we can define, based on the number of users and the number of transactions, all the things, what's the value of Bitcoin? Because Bitcoin is simply a computer network. That's all it is. Bitcoin is a network, and networks can be valued. So I will argue that based on my friend Tim Peterson's model, this Metcalfs Law model, that the fair value of Bitcoin today is around 55K. So every investor, what's an investor? An investor is someone who buys something below its fair value. That's what investors do. Okay.
Right.
Now, that's not good or bad. That's just what an investor is. Then there are traders that don't really care what fair value is. They just want movement. They want to buy things that are going up. They want to sell things that are going down. And again, that's not good, bad, or indifferent. Some people are good traders. Some people aren't. I'm not very good at it. I'm an investor. I like to buy things where below fair value. Okay. Then what happens is in crypto summer, investors start moving the price toward fair value. Well, then what happens is this halving event. So every 4 years, the number of rewards in the Bitcoin network get cut in half. Well, why does that matter? Well, the rewards, what are called block rewards, are what are used to pay the miners to secure the network. Okay, that's great. So if that gets cut in half, the miners then would go out of business. We can't have that. So the price starts to rise. Well, as the price rises, what happens? It attracts more traders. Yeah. It then attracts the speculators. What are speculators? Speculators are people who buy stuff just because it's moving. Again, not caught passing judgment. Where I will pass judgment is then what happens is you get into this parabolic move, right? What's crypto fall. Yeah. And we get to this place where the price now gets above fair value, but people are still buying it. And then the gamblers come in. Well, who are the gamblers? The gamblers are the people who use leverage. And I don't have anything against that. I'm not good at it. I'm not going to do it. But the problem is it goes way above fair value, and then you have the crash. And so you're going to have this cycle of bull markets and crashes because of this movement from investors to traders to speculators to gamblers. And again, that's okay, but the cycle will repeat and then it'll crash. And then what happens is the gamblers sell and the investors come back and buy it at a fair price.
Okay. Do you invest in any other crypto, Ethereum, altcoins, or like are you Ethereum. A purist?
I know. I'm an equal opportunity employer, so to speak. I like Ethereum. I have been in the past a big investor in Solana, although I'm not as excited about that today because they haven't solved the accuracy problem. I like Avalanche. I think it's an interesting project. I like the founder of that. but there aren't that many. I like some of the privacy tokens because I think privacy is interesting. I think Dash is interesting for people in Venezuela. But most of the tokens are utility tokens. And I have very little time for utility tokens like Doge and Shiba and that kind of stuff.
Yeah.
I mean, yeah, if you want to meme something and get people to buy it, and the people who mined it originally can sell to other people, that's a great game for some period of time. But I can't see any real utility. Like if I sold you Mark tokens and then I took the money and I went out and built a Chuck E. Cheese and then gave you the tokens, said, hey, go play the video games, you would have been better off to say, no, I want to own a piece of the business. I don't just want the tokens. I want a piece of the business. But most utility tokens, you don't have any claim. You don't have claim on cash flow. You don't have equity. You don't have debt. So they're just pieces. But I will argue it's not very different than how people treat,
Stocks.
AMC stock or Tesla stock or GameStop stock. It's just, like the worst was when Davey Dave was reaching into a bag of, Scrabble tiles and picking out 4 tiles and saying, buy this stock. That's not investing. That's just no different than picking a utility token and buying it because its price is going up.
What I like about Bitcoin is that it is the most portable form of wealth for people that think they might have to go. You just you carry your wealth with you. I don't know.
I'll leave you with this. I'll give you this last thought on that because I got to run. But the key is, in the old days, gold did that for 5,000 years.
Yeah, you get a hernia, carrying it.
Yeah, but the problem is, if I had a bar of gold right now, and I want to send you half of it, I'm not strong enough to break that bar of gold in half, right? I mean, it's just kind of hard. And then worse, even if I could break it in half, I couldn't stuff it in my computer and send it to you. Whereas with Bitcoin, I can grab my phone, punch a couple buttons, and send you Bitcoin immediately. So it is the digital form of gold. And we went from an analog world, bars of gold, to an electronic world, gold ETFs, to a digital world, where now we have digital, unique, identifiable, permanent, immutable ownership on blockchains. And this is important because I used to say that the Medicis, right, created fractional reserve banking, and they stole the idea, because Picasso said, good artists borrow, great artists steal, stole the idea from these monks. And I actually didn't know who the monks were until 2 weeks ago. I learned that in Portugal, there were these monks called the Order of Christ, the Knights Templar, and they invented fractional reserve banking.
Yeah.
The Medicis gave it, or took it from them, borrowed it. And that's why we all use fractional reserve banking, because it all goes back to the Knights Templar. And what's funny now is everywhere I look, I see the Order of the Cross, like in monuments, on the ground, in statues, everywhere I look. And I'm like, Knights Templar everywhere. But that fractional reserve banking is really important because it allows money to work, and gold was the base layer.
Right.
Well, if Bitcoin now is the base layer, then we'll have other forms of currency on top of it. And currency is just a form of debt, and that's fine. And there'll be fiat currencies, and hopefully there won't be CBDCs, but there probably will. And all of us can have a portion of our wealth at that base level, gold, and ultimately Bitcoin. And that's how we win.
All right. Well, you promised to let me know if you start seeing UFOs.
Absolutely. Yeah. I will. I gotta go to Latin America and look at the Mayan culture to find those, I think.
Mark, time flew by. I really appreciate talking to you. And every time I do, I learn. And you're a great ambassador for the product. And I encourage people to follow your work, go to your website, follow you on Twitter. You're part of my intelligence gathering for this sector.
Well, I appreciate that very much, Dale, and we'll look forward to doing this again soon.
All right.
And be well. And I dig your shirt. And unfortunately, America is in a little bit of turmoil here. But
wait till the elections.
I think collectively we can make it better.
Yeah, we'll help people avoid some landmines. How about that, buddy?
There you go. Perfect.
All right. So everyone,
be well, my friend.
Adios, my trading warrior brother. Take it easy.
All right. See ya.
Thank you.
Be well.